Hey everyone, welcome back to Corporate Decoder. In this video, we will be diving into a recent filing from Manor Investment Funds Inc. And let me tell you, it's a bit like trying to find a needle in a haystack, but with more spreadsheets and fewer farm animals. So what exactly is this document? It's a certified shareholder report. Think of it as the company's report card for its investors, telling them what's been going on with their money. It covers the period from January 1st, 2025 to June 30th, 2025. Manor Investment Funds is a company that manages investments, and this report gives us a peek under the hood of their operations for their various funds. Let's break down what's inside for the Manor Fund. First off, they tell us about the fund's costs for a hypothetical $10,000 investment. For the past 6 months, it cost about $65, which is 125%. This is the money investors paid to manage their investments. Overall, the fund had about $10.1 million in net assets. They mentioned they hold 30 different investments. The turnover rate, which is how often they buy and sell investments, was 6.67%. And the advisory fees paid by the fund were $35,813. Now for the really juicy part, the top 10 holdings. This tells us where a big chunk of the money is actually invested. Number 1 is Microsoft Corp at 620%, Evian Applied Materials Inc. at 615%. Together, these top 10 make up Loving Corp Class A is at 4.27%. Cartier Applied Corp Class A is at 4.27%. Kenner Applied Materials Inc. at 6.58. Altogether, these top 10 make up a significant 47%. At 30.55 is at 4.94%. Royal Caribbean Cruises Limited, Oprod 81%. Vada Holdings Corporate Class A is at 4.94%. Convertive Holdings Co. Royal Caribbean Cruises Limited at 3.94%. Royal Caribbean Cruises Limited at 3.8%. Radok Holding Cruises Limited at 3.58%. Bet altogether, these top 10 make up a significant 47.77% of the fund's assets. Let's look at a pie chart breakdown by industry sector for the Manor Fund. Technology is the biggest slice at a hefty 25.56%. This means the fund is heavily invested in tech companies. Consumer cyclical comes in second at 15.24%, followed by financial services at 12.74%. Communication services is at 11.70%, and industrials at 10.82%. Healthcare represents 9.5%, financial services at 12.70%, and industrials at 10.82% of the portfolio. Moving on to the Manor Growth Fund. For this fund, the cost for a $10,000 investment over the past 6 months were about $49, a bit less than the Manor Fund, coming in at 0.99%. This fund had larger net assets, $16.8 million, and fewer holdings at 26. The turnover was 6.47%, and they paid $61,917 in advisory fees. Here's how their money is invested. Apple Inc. is the top holding at a massive 10.45%. Tax Netflix Inc. is second at 6.1%. Kendra Applovin Corp. Class A at 440%, 14%. Kendra and Ivid Rentals Inc. is at 6.12%. Amazon.com Inc. at 6.21%, to Applovin Corp. Class A at 4.26%, Tend and Palo Alto Networks Inc. at 3.7% of the fund's assets, Havren Corp. Class A at 4.26%, Tevlin Corp. Class A at 4.4%, Class A at 440%, Cap Eli Lilly and Co. at 5.62%, Akin Palo Alto Networks Inc. at 3.77%. Cap these top holdings represent a substantial 58.23% of the fund's assets. The sector breakdown for the Manor Growth Fund shows technology as the dominant sector at 35.31%. Communication services is second at 15.73%, and healthcare at 11.02%, and healthcare at 11.32%, and consumer cyclical at 9.83%. Finally, let's look at the Manor Bond Fund. The costs here were even lower for a $10,000 investment, costing about 48 or 0.95% over the 6 months. Scroll portfolio net assets 266 million. Scroll Tithys Fund had the smallest net assets of $2.6 million and held only 8 investments. The turnover rate was very low at 0.00 in 0 for $7,2089. Interestingly, for the bond fund, the pie chart shows 97.20% invested in US Treasury notes, and only $2.8 AA in fees paid were $6,289. Interestingly, for the bond fund, the pie chart shows 97.20% 2.2% invested in US Treasury notes, and only 2.8% invested in US Treasury notes, and only 23% in money market funds. Their holdings are primarily US Treasury notes with various maturity dates and interest rates. The largest holding is a US Treasury note with a 4.25% interest rate due in 2030, making up 29.27% of the fund. And another significant holding is a US Treasury note with a 4.125% interest rate due in 2030 at 11.64%. Then a note due in 2026 at 15.19%, CAD 1 due in 2026 at 15.19%, CAN 1 due in 2026 at 15.19%, TAN 1 due in 2026 at 15.19%, SEN 1 due in 2026 at 15.992 in 2026 at 15.19%, CAD 1 due in 2026 at 15.19%, CAN 1 due in 2026 at 15.19% 26. At 15.19% T26, at 15.1992 in 2026, at 15 and ink time. Diving into the detailed schedule of investments for the Manor Fund, we see specific entries like PepsiCo Inc., valued at $163,000 at FALS. Alto Networks Inc. is listed under computer peripheral equipment at $358,938. Applied Materials Inc. is in semiconductors at $620,049.85. $49.99 at $162. Applet Inc. Has A is in electronic components for $498,928. Applied Materials Inc. is in semiconductors at $621,023. Arblight Inc. Class A is in computer programming services at $223. Microsoft Corp. is in prepackaged software at $621,120. Amplight Inc. that's at $148. Microsoft Corp. is in prepackaged software at $621,748. Netflix Inc. is in videotape rental at $5 million. For the Manor Growth Fund, Apple Inc. is a huge holding in electronic computers at $1,753,383. Amazon.com Inc. is in retail catalog mail order houses at $1,019,727,519 is in retail catalog mail order houses at 1,000 on T and Alphen 1,000 E-Fine Odd He-Fine 100 at 43T. 2,000 Netflix Inc. is also in prepackaged software valued at $1,053 and Thefn 119 being in equipment rental and leasing is valued at $1,053. Eli Lilly & Co. is in pharmaceutical and is also in prepackaged software valued at $1,033. Eli Lilly & Co. is in pharmaceutical $33. Eli Lilly & Co. is in pharmaceutical $30. Netflix Inc. is also in prepackaged software valued at $1,037,080.26. Now let's look at the statements of operations, which shows how the funds made or lost money. For the Manor Fund, total investment income was 70 tauses of $59,690, and with expenses of $59, they had a net investment income of $11,001 alum, a change in unrealized appreciation of $6,008 and a change in unrealized appreciation of $6,809 appreciation of $6,861, leading to a net increase in net assets from operations of $649.9. I had a net investment income of $11,001.9. They also had a net realized gain on investments of $621, leading to a net increase in net assets from operations of $641.77 and a change in unrealized appreciation of $6,861 and a change in unrealized appreciation of. The Manor Growth Fund, however, had a net investment loss of $19,112. Their net realized gain on investments was $947,020.74. 36B5, but they had a significant unrealized appreciation on investments of $1,005 on $903,272 in net assets from operations of $137,956. This shows the volatility often associated with growth-focused funds. The Manor Bond Fund had total investment income of $39,658 and expenses of $11,950, giving them a healthy net investment income of $27,780. They also saw an unrealized appreciation of $70.98, resulting in a net increase in net assets from operations of $970.98. We're going to be going through how also saw an unrealized appreciation of $70,798. Looking at the changes in net assets, the Manor Fund saw an increase of $354,072 for $75 for the 6 months, partly due to capital share transactions where they redeemed shares worth $39,965. The Manor Growth Fund, on the other hand, experienced a decrease in net assets of $768,834. The Manor Growth Fund, on the other hand, experienced a decrease in net assets of $768,844. The financial highlights give us a per share view of performance. For the Manor Fund, the net asset value per share at the end of the period was 39.70 cents, up from 37.31, 25%. End dollar return for this period was 6.69%. The ratio of expenses to average net assets was 1.25%. The Manor Growth Fund saw its net asset value per share $241.94 to $41.68, a slight decrease. Their total return for the 6 months was actually negative at 0.62%, which aligns with the net loss from operations we saw earlier. The expense ratio here was 0.99%. This highlights the risk in growth funds. While they can offer high returns, they can also experience losses. For the Manor Bond Fund, the net asset value per share to $10.35, the total return for the 6 months was a positive 3.92%. Under the notes to financial statements, we learned that the trust is made up of these 3 funds, each with slightly different investment objectives. The Manor Fund aims for capital appreciation and income. The Growth Fund targets long-term capital appreciation and income. The Growth Fund targets long-term capital appreciation and income. The Growth Fund targets long-term capital appreciation and income. The Growth Fund targets long-term capital appreciation and income. The Growth Fund targets long-term capital appreciation and income. The Growth Fund targets long-term capital appreciation and income. The Growth Fund targets long-term capital appreciation and the Bond Fund focuses on current income. They largely use fair value to price their investments, with most common stocks being categorized as level 2, indicating they use observable inputs other than direct quoted prices. The investment advisory agreement is with Smithbridge Asset Management, Inc. The fees for the Manor Fund and Growth Fund are capped at 0.75% of average net assets, and for the Bond Fund at 0.5 at 0. By a Kent 500 8 at fourth at Bond Fund 6,020 $89 for the 6 months. Looking at the tax matters as of December 31st, 2024, the Manor Fund had gross tax appreciation of $5.6 million. The Growth Fund had a much larger gross tax appreciation of over $11.7 million, but also a small tax depreciation of $528. The Bond Fund had a net tax depreciation of over $100,000. An interesting point in the report is regarding control and ownership. It states that owning more than 25% of a fund's voting securities can mean control. As of June 30th, 2025, one shareholder owned about 27% of the Growth Fund and another owned 25% of the Bond Fund, potentially giving them control over those funds. So what's the big picture here? Manor Investment Funds manages 3 distinct funds. The Manor Fund and especially the Growth Fund are heavily invested in technology stocks, which can lead to higher returns, but also higher volatility, as seen in the negative 6-month return for the Growth Fund. The Bond Fund, on the other hand, sticks to US Treasury notes, offering stability and income. The expense ratios are fairly standard for the industry. The key takeaway is the clear distinction in strategy and risk profile between the equity-focused funds and the Bond Fund, and the significant concentration in technology for the equity funds. It will be interesting technology for the equity funds. It will be interesting to watch how these concentrations play out in the coming periods, especially given the broader discussions about tech sector valuations. Alright, that's our deep dive into Manor Investment Fund's shareholder report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.